Hi guys, in this video I'm going to talk to you about how I do technical analysis, and before I start talking about how I draw my lines and all the things I do before I trade, I I'm using TD Ameritrade, which is a very nice platform to use for charting, and lots of professional traders to use TD Ameritrade because it has lots of studies, lots of drawing tools, lots of indicators, and it's a little bit sophisticated when it comes to um, all the infrastructure traders need. But when it comes to executing orders, it's not a direct routing broker, which means the execution on the platform is very slow, and so most of the time you get lots of slippage. And so what lots of traders are doing is that they use TD Ameritrade for charting, but at the same time they use other brokers for executing orders. That means I can use DAS Pro, or I can use Sterling softwares, which lots of brokers use, like E-Trade, like Zero Pro, like short trader in the past, but and the other like interactive brokers. So lots of these, and the speed trader and the others. So lots of traders, they use, as I said, TD Ameritrade for charting, but they use other platforms for trading because TD Ameritrade is not a direct routing broker, and so when you are a trader, you need very fast orders execution, which Ameritrade does not provide. So in a sense, Ameritrade is good for swing trading, is good for investing, but as a scalper, as a trader who's looking for very short term, a quick dollar, as they say, Ameritrade is very slow. So it's a real-time data account. As you can see, it's a real account. But if when you open an account, you don't have to pay anything for the account, so it's free. The platform is free. The only thing that you need to do is that you need to email them in order to provide you with real-time data, because when you open the account, the platform is delayed 15 minutes, and so you need to contact them to provide you with real time data. So that's the first thing. So today I'll try to use ZKIN as an example, because this tag has been in play yesterday. It came from 8 all the way to 14, almost 100%. And so lots of traders were trading this, and on Monday this is gonna be in play as well, especially to the short side, as we have seen it faded from midday all the way to the close. And so uh, I'll try to draw my lines. And before I start doing this, I'd like to remind you that I only use a couple of indicators, and I rely mainly um, on a price action. I don't use lots of indicators, but you can use lots of indicators if you want. The platform has many indicators that you can use, many studies that you can use, um, and so so it's up to you. The only thing I use is price action, the VWAP, and the volume. And so I'd start with first talking about how, um, I mean, on a daily basis, how I draw my lines. So the first thing is, this is the chart of ZKIN. This is a stock that Rhino used on, as I said, yesterday. And so, um, correct, so ZKIN. So it didn't have news yesterday, but it had news like I think on Wednesday or Thursday. And so the news are related to the NFT sector, and we have seen lots of stocks run in sympathy to the other plays that have news related to this sector. So we have TCAT, we have YVR, we have OCG. So for example, TCAT, I guess came from $5 all the way to 40. Also OCG came from $6 all the way to 16, and then it's fading again. So ZKIN is related to that sector, and so the first thing I do as a trader is I draw the lines that I think were in play the other day. So the first support, so I start with support lines. So this is the first support on the intraday chart. This is ZKIN on the 1 minute chart, 1 minute chart. So every candle represents 1 minute worth of price action. So the first thing is I draw my support lines. Then we have also this line here around this area. Then we have this level around this area as well. All right, and then we had this level here. Even though the levels that are very important are the ones that, for example, this resistance here is not very important, or it's not as important as this one. So we give precedence, we give more importance to the level, price levels that come later. So like this one. So I will draw this one, but I won't be drawing this one because this one is not important anymore. This level, the importance of this level has been broken by this level. So we have also this level as a resistance. We have a little level here, have another level here. I don't like to draw lines on wicks like this on wicks, because I consider that these are people trading at the extremes. All right, so all this price level is people trading at the extremes. Anyway, so these are the main important levels. So I don't want to draw a line here simply because this level has been discontinued. It has been rendered not irrelevant anymore by this new level. So these are the main levels that look important to me. So when I started trading, I would start with drawing these lines, the support lines in green, and then the resistance line in lines in red. You can do that if you want. You can do to you press the left button, the right button, and go to edit properties, and then you choose the red if you want the red or green or pink, and then you choose the style like that, and then you do it like this. So you have that level. So if you want, you can do that to resistance. And anyway, so so that's how I do my levels. And then so I move to the 30 minutes chart and see the other prices that I think could be in play should this continue lower. So the first level I think is gonna be in play would be around this area. All right, around this 858-ish level, and then we have this level again. And what's important is that we should think about levels as areas. So it doesn't mean this price level doesn't mean exactly 858 8ish, it means all this area around this level price. And so we should observe price at these areas. What is price doing there? And you can see that, I mean, on the chart, you look at the candles formation. Are the candles bottoming? They are basing. Do we have some strength? Let's say lots of wicks to the downside, which means that price couldn't stay there. That means we had more buyers. And or you can look at the times and sales. Do we have more buyers, more sellers? At the same time, you can look at level 2, even 2. I mean, which is more I mean, which is not as lagging as times and sales or the chart. Level 2 is a leading indicator. It's not lagging as volume and as times and sales or the chart. So the chart tells you history, what happened, but level 2, even times and sales, tells you what happened, because these are executed orders. But at the same time, when you look in at the direction of orders in times and sales, you can a little bit anticipate if we will bottom or if we will break down that level. So we have another level here, then we maybe another level here, another level here, another level here. And then what we do is we go to this does not mean that tomorrow or next week this is gonna go all the way to 4, but it's just we need to be wary, especially if we are short, that this thing can really bounce from one of these levels. And so that's the importance of these levels. They make you aware, especially if you are short and you're waiting this to break down, that this could be potential reversal areas. And so let's say as a short-term trader, I mean a trader who trades the short-term time frame, I need to be wary of important levels on the intraday or on the last 2 or 3 days. So tomorrow, I mean on Monday, what I would do is I would say if this can really reclaim this 1150-ish area, it can really go towards 12. And then if it can stay above 12, this really can go to 13. Or I can say if this remains below 1150 and then shows lots of weakness, it can go to 1075-ish, and then it can really continue lower to 10 and then all the way to 850-ish. So it's like the next level. You always look at the next level. Is it worth it to, for example, when the price is at 1190, to try to long it? It's not very worth it, because we have the VWAP there and we have this important support level, which is potentially gonna be a resistance level. That means the reward for me does not justify the risk, because if I buy it here and then the resistance is only in 10 cents away or 15 cents away, the risk for me is this to come all the way to, it's like $1 risk. So I'm risking $1 to make 20 cents. So we need to think in probability. It is more probable for this to top at this level, and so we should, the reward should always justify the risk we take. So that's how I do it, the 30 minutes chart, and then maybe I check the daily chart. I see the levels. As you can see here, we have this level as well on the intraday chart. This could be a very important level. So let's see how the levels that I've just drawn, these two levels are gonna. So we have also this level here. I mean, these levels are not anymore important anymore because they are discontinued on this pop. But the thing is we need to be aware of is this could these levels, I mean, could be transformed, especially here and here. These levels could be transformed into potential support areas. So while on the intraday chart, it looks that the stock is going lower, that means it's losing momentum. But on the daily, maybe it's not losing momentum. Maybe it's just going to transform a daily resistance into support, and that's very bullish. And so we draw this line, for example, we draw this another line here. And so what we do is now we go and check how these daily levels have drawn on my chart. I mean, where are they located in the intraday chart? So these are the levels I've drawn on the daily. This is the first level. As you can see, they extend to the left. This is the second one, third one, the fourth one here. So let's see here. This is the first daily resistance, which can be transformed into support. It didn't happen. We are already below that. So this is the second one that could be transformed into support. So tomorrow, if I'm still on Monday, if I'm still interested in shorting this, I should be worried that this thing can really bounce from this 1050. And so if it bounces on 1050 and I see that there is momentum, this thing can really go back to 1150. And from 1050 to 1150, that's $1. And so my risk, my reward, the ratio should always be in my favor. I shouldn't risk 3 to make 1. I should only risk 1 to make 3 or more. And so we should be worried about this 1050 level, and then we should also be worried about this level when it comes to daily levels. And so these levels are very important. So these are the most important levels for me. So now I trade off these levels. So tomorrow, so this is it's like technical stuff. It does not define my entry or my exit. It does not define my bias. Of course, it informs my bias. It affects my bias or my entries, but it's not the only thing I'm relying on to enter or to exit. So let's say tomorrow I woke up and this is really above 1150, okay, and the VWAP is just around this area, and then I saw this reclimbing the VWAP going back to 12 and then pulling down a little bit. I shouldn't be short biased anymore on this. So that's the first thing. So I use these levels, but I don't let them blind me to my entries or exits. And so I shouldn't be complacent, because this goes back to 12. I would say, oh, this is a bag holder setup. This resistance is gonna wait on this, and so it's gonna, this volume is gonna bring this down. It couldn't go to above 12. No, but that shouldn't be the thing that defines my trade. My trade should be defined by times and sales level 2. Do we have more buyers or sellers? If this goes around 12, it's a good short entry, but I should be convinced. How? It shouldn't be just words. It should be based on other indicators, and one of which is the VWAP. So I should see where the VWAP is in relationship to the price. Are we below the VWAP? There are lots of strategies that basically use VWAP, and these are institutional and some of them are retail based. And so if this reclaims the VWAP, this is gonna hit the scanners VWAP reclaim alerts on many platforms, and this is gonna generate more maybe interest from the retail community And if the sector is still in play on Monday, this can really, it's like continue higher. And so I should always be careful. So the VWAP is the most important indicator I use in addition to level 2. So the second thing is the volume. So I use price action, price levels. I use the VWAP, and the VWAP is the volume, the okay, the volume, the price volume weighted average, something like that. Let me see. This is the average volume. I mean the average price people have bought at. So it uses price and volume. Volume weighted average price is the ratio of value traded to total volume. So basically, if the price is above the VWAP, it means that the majority of volume was done above the VWAP price. If the price is below the VWAP, that means the stock is losing momentum and lots of volume. I mean, lots of people are losing money. So that is the average. In other words, is the average where people have bought the stock. It uses the price and it uses the value. And there is another one called anchored VWAP. It was developed by Brian Shannon. So anchored VWAP uses the volume, uses the price, and the time. And that this is one of the, for me, one of the most sophisticated indicators out there. I don't know if TD Ameritrade has anchored VWAP. So anchored VWAP is developed by Brian Shannon, and it's one of the most interesting indicators out there. I think even Yahoo, or TradingView, they all have the indicator. Anyways, so I use also the volume in the sense that, and this is one of the things that I like about Ameritrade, is you can really draw your lines on volume. The other packages don't allow you. I mean, depending on your time frame, you should draw volume. So for me, on Monday, if I'm to short this, I don't want it to do as much volume as it did on the first day. It did on Friday. I want it to do less volume, especially if we come towards this 1150ish 50ish 12ish area. I want to see the volume drying up. This is in case I want to short. If I want to long this, I want this to go above the VWAP, especially above 12, and then the volume, I want it, especially in the first minutes of trading, I want more volume. That's gonna show me that the stock is really gonna be in play. It's like the next day. And so this is, or you can use just the RVOL, relative volume. That means the volume it does today relative to the last days. And so these mainly are the levels that I'm watching. So the first thing I do before I trade in stock, I check. I mean, this is a recap, a summary, and then I'll talk about the fundamental aspect. The first thing is I talk about the levels that I think are very important on the day, and then especially on the 1 minute, then on the 30 minutes, and then on the daily. And then I develop a bias. First, I need to look at the stock, where the stock is trading now in relation to the daily range, I mean the intraday range. So the stock traded from 8 to, let's say, 15, okay? That's almost, let's say $7 range. And today, and it closed at 11. That means it closed almost 50% below the high day. All right. So for me here, to try to short here is not really very promising, because this thing can just really come back again to less than 50% of the range. That means I should always trade when there is when the reward justifies the risk. So the stock is trading is like in the middle of the range now. So there is no, for me, there is no advantage. There is no edge. There is no edge here. This can just keep, it's like consolidating here. But let's say when it pops on a volume spike, just a little volume spike on the first, and then, I mean, on the open, and then I see it's like topping at the VWAP, transforming these support areas into resistance, and um, I see lots of sales. I mean, lots of red on sales, on times and sales, and I see lots of asks on the offer. It's like a stuffed offer into a spike into that previous support. There I have an edge. Why? Because I can, at least the stock just moved a lot on very low volume below the VWAP on a broken stock on a catalyst that's not very interesting. And the company is a broken company. That's the edge. Okay, so that's the first thing. The second thing is I choose the setup. It completes my edge. The setup here is a bag holder, or you can say a VWAP rejection setup. Let's say staffed ask. So it's like lots of setups using different indicators, using the staffed ask on level 2, VWAP rejection, and a chart pattern, a transformation of a support level into resistance here, which is bearish. And also a fundamental catalyst that's not very interesting. And also so after I do this, then I go to the fundamentals. I check the company. Do they generate profit? Is the company profitable? Is it not? How much money they need? How much money they still have left? And so, like, my bias is even confirmed on the fundamental side. And the company is based in China. That's all I need. Sometimes just because the company is based in China, this is a personal conviction on Chinese penny stocks. This is what they do all the time. All the time. It always happens like that. Same, people think it's a different story this time, but it's always the same story. Companies, they need money. They hire a manipulator. They give him a couple of millions of dollars, and then they ask him to pump the stock. And they use different means to pump the stock. They even use level 2 as an advertisement tool. Anyways, so that's basically what I do every day, and then I use my Zero Pro platform to trade my bias. All right, guys, this is what I do every day. I hope you like the video. All right, enjoy.